All right, traders, welcome to today's recap. It is Wednesday the 27th. This is Christian from Hertz Tribeca Trade Group, and we'll go over some technicals today. We'll kind of go over today's option activity as well as today's market activity to the downside. All right, so let's let's talk about this S&P chart. You kind of have to laugh just a little bit because it's really tough to trade this market. It's happening so fast, and I'll go over a couple of charts. So if you had a rough day, I would not, beat yourself up about it. This is a tough market to trade. We talked about this in last. I will say we talked about this in last night's video, and I'm going to talk about a couple things that we've been talking about the last couple days, which kind of just came to fruition, which I didn't want it to work that way. But it does. I will say this: the one thing it helps is to have a little bit of a plan and to, take a look at some of the things that are unfolding, and then try to basically accept that things are not going possibly the way that you want them to, and then to make some decisions. It's tough. It is really tough as a trader and anybody to do this because you kind of have to be able to change your opinion and change your not your thought process, but change your view very quickly and be able to adapt very quickly. So saying all those things sounds so easy, but in practice they're very hard, especially if you've got one view and you've got a pretty good idea of what you want to do, and then things start to change, and honestly things have changed very very quickly. So let me just rehash a couple of the events, and then we'll talk about today's price action and just how quick it was. But we talked about this yesterday, and a member brought this to my attention yesterday, so I'm not going to take full credit for this. But looking at this price action, and I know I've got a lot of stuff going on in this chart, so bear with me. I'll break it down. But if you look at this candle that we had on Monday, which was god awful, right? Monday we very quickly broke into the value area and had some ugly price action. If you reverse and you go back to here, this kind of gave you an interesting playbook, and it was kind of how I approached today. We had a very similar, almost at the same exact level in the S&P, by the way, if you look at this red bar, followed by an inside day, which was on the 20th of March. Same thing happened yesterday, right? Same inside day, which you couldn't really make any conclusions on. And I was up last night late looking at charts, and I'm like, there's got to be something that's showing a little bit of life to it, in terms of some more mainstream names, and it just wasn't there. Just about everything showed an inside day, except for maybe like 2 or 3 names that I saw, like Apple was one of them. But other than that, when you see those big inside days, it just doesn't. There's not really. You can't really form an opinion or make a conclusion based on an inside day. You need more information. So today, what the plan was, and this really was a good indicator. If you go back to the inside day that we had on 320, and then on 321 we started to go higher, and we failed completely on this day, and we ended up going lower, and we had then we returned back to the 200-day moving average. So basically the same thing happened today. We tried to go higher. Things looked great about 10 o'clock in the morning. There was some positive headlines. By the way, this is a very headline-driven tape. And then we reversed. So you could look at this in a bunch of different names. So this is why it gets hard, and I would not beat yourself up over it if you didn't time this perfect. I'm never going to be one of those guys, pick a spot on a chart and say, oh yeah, here's where you should have sold. I mean, that's very easy to say in hindsight. And I see other people put out videos like that. Oh yeah, right here on this bar is where you should have sold. I mean, honestly, or maybe they would say here on this bar would be your sell once we broke the 20-day. Sure, but it's very hard to kind of pull the trigger, especially when you come back and you retest, and you're like, maybe we're going to hold on here for a minute, and then it just kind of the bottom falls out. So, if you went up, if you got yourself a coffee or went to the bathroom and you come back and your P&L does a complete topsy-turvy. So that's literally how fast it is. So my plan for the day was, and this happened in a bunch of names. Another name that I was watching today was Under Armour, which was looking like a wonderful setup today. And, you know, it was at here, and I was like, wow, this thing's going to actually turn the corner. Found some support at these moving averages. Top of value is going to return and maybe punch out to the highs. Now, it may do that. It's still above the short-term moving average, but just to see this, how quickly the turn, you know, happened. So again, you can look at basically any chart that you want to for the day. They all kind of, you know, 90% of the charts did this today. And that's what makes it really difficult too, because there's not a lot of places to hide. You know, what are you going to do? Go into all utilities, consumer staples? You know, that's tough. I think you could have one of those positions in utilities and consumer staples, but I don't think you're going to put your whole portfolio there unless you're really defensive. I personally would not do that. So the best that you could do, because it's really tough to react with this, is try to have a little bit of a game plan going into the day. So where does that leave us now? Oh, and the other thing I wanted to talk about. So we could revisit the 200-day moving average. This will be the next area of support. Now that we've kind of broken below the 50 decisively, you know, we saved it, right? And I said this. I think I said this yesterday in yesterday's video. I said, watch this 50-day moving average. We violate it, and we're in a bad place. So unfortunately, I think there's more downside, and I kind of made that decision. And, you know, not a decision on the fly, but I had that kind of programmed into what I was going to do today. And I said, hey, if we start breaking, other than you know, the fades that we've been seeing recently, but if we really start breaking and going the other way, I bought some Q's puts today, which helped a little bit. You know, I think I bought some for 324, and I sold them at the end of the day for 430. July puts that I had in the Q's. So, you know, that helped a little bit, and it helped to have a little bit of a plan in place for that. At this point, you know, I do think there's probably, I'll be happy if we don't do this, but I would think that we're going to go back down to the 200-day moving average, and we'll see what happens there. Could we break that? Sure. Notice that this 200-day moving average has been moving higher, so it's now, you know, is a more difficult hurdle for us to hold it. Because it's been moving. You know, here was a test. This was all the way at 25.40. By the way, I went over all this in the end of day. You know, we talked about this at the end of the day in the trading room. So if you're watching this on repeat, I apologize because we went over a lot of this. But the 200-day moving average has been rising. So, you know, you go back to which I don't have that spreadsheet up anymore, but you know, I put this out, I think, on Twitter if I can find it. I don't think I'm, revealing my plans later for the day, which I will get to. Is a good idea to kind of do that. But I don't have the spreadsheet up anymore, but if you could see this on the tweet that I sent out around 12 o'clock today. If you look at all the international markets, and this is something that I've been talking about for a week, they're all breaking down. So if you really think that the U.S. is going to, you know, as they say, whistle by the graveyard and not be affected, I don't think so. So, you know, and I've been saying that for a week, that everything internationally has been breaking down. It's all connected. So and I said this as well on Twitter, and I said it, I think, in last night's video, while we are, I think, the best house on the block, all the other houses on the block are burning. So to think that you're not, and again, I think that's the best. It's kind of a cheesy analogy, but I think it's the best to use. So, you know, that's IFA. This is internationally developed, and it's not China. Like somebody told me today, you know, on Twitter, they're like, "Oh, well, China." I'm like, look around you. Look around at some of the other. This ETF has no China in it. This is international developed. This is European, and this is Japan. And it's broken down decisively. So again, I could go through these one by one, but there's not one big, I'll preface this, big international area that is doing okay. They're all breaking down. EWU is probably one of the better ones. This is the UK. That's below the 200. So you got support down here. We'll see how it handles it. Now we go to the worst. We go to emerging markets. But again, this is not just emerging markets. This is everywhere. The only thing I say that looks good is Saudi Arabia. And that even was down today. maybe a couple very small country ETFs. But you're looking at, the chart that I showed yesterday was non-U.S. securities. This is ACWX is global minus U.S. It's atrocious, and it's breaking down. So if you think this can't happen to the U.S., I would be very mindful of your risk here, considering what is going on globally. If everything else was in an uptrend, I would say, yeah, we probably have another bout of short-term volatility. I'm worried that we're actually going to break the 200 and keep going. So watch your stops, watch your exposure, and wait. I don't have a crystal ball either, so I'm not making any predictions. I think you just have to watch price. And the other thing to watch here is how big the candles are getting, right? I mean, we could look at the one of the strongest areas of the market's been the internet stocks. Look at how big the candles are getting. Let this work its way through. I don't know where it's going to stop, but to close on the lows with heavy, it's a sell signal. These two moving averages crossing over, that's a sell signal here. So let it play out. I think one of the mistakes that retail traders, and I'm a retail trader now too, I'm no longer an institutional trader, and I'm guilty of this from time to time, is you want to catch a falling knife. You're like, oh, it's down 3% today, let's buy. Let it play out. If you want to do that, do a starter trade for like a really, really small amount. But let these things play out. The silver lining, I would say, go back to EM or FXI, is these things are really getting oversold. So they're probably at some point due for a bounce. You can look at the FXI ETF, which we saw a little bit of call buying today, this morning. Keep in mind the call buying, which somebody was harassing me about, saying, oh, there's FXI calls. Well, the FXI calls traded when there was positive headlines about China. So there was, there was puts that went up too. Everybody seems to ignore the puts and only focus on the calls. There was a lot of puts that were swept again too. I don't know where people learn this stuff from, but paying attention to puts and calls is very important. So yeah, I can't even find the calls that went up earlier, but I did see one that went up earlier in FXI. But take a look at the RSI, which is a really good gauge of whether something is getting oversold or overbought. Is now at a 24 RSI. So it's due for a bounce. I don't know whether that happens tonight. I don't know if a headline causes that, but we're getting to the point where this is really getting oversold. So that's a positive there. And, keep in mind, we're really working off a very headline-driven tape. I will say this, and again, I've been repeating myself saying the same things here, but, consumer confidence has been very strong. Small business optimism has been extremely strong. However, the longer this trade war lingers, all of those positives are going to evaporate, right? I'm a small business owner. Do I want to invest more when there's more uncertainty on the tape about what's going to happen with supply chain and everything else? No. So it's going to be getting a ugly landscape, or getting to an ugly landscape, if this situation does not get rectified soon. And you could see international markets are the ones that are taking the brunt of it first. All right, so call activity today. GBT was a huge, this was a name that we played yesterday. I had detailed there was a call spread that went up yesterday. It did not finish on the highs. What a crazy day in this thing. I think this had a lot of people confused. It had this biotech had positive results that had come out, and it moved down. So there was a lot of call buying in this today, just as there was yesterday. There's a real nice call spread that went up yesterday, but nice call buying today in GBT. So that was a nice trader. There was a lot of people talking about that in our trading room. A couple of people really did a good job. Somebody bought 1,000 shares of this in the room today, I believe, on the lows. So great job. Notice this VPOC. This is as far as we went. We went a little bit further, but these version point of controls, time and time again, seem to be great places to be mindful high volume areas that have not been touched before. It's kind of like a gap. A gap gets filled. That was probably the best thing today. There were some other trades today. There was some Snap trade, went up on a headline. There were some URI calls that were bought yesterday. There were some URI calls in January. STZ calls bought ahead of earnings. They report at the end of the week. There was a little bit of Microsoft calls that went up at the end of the day. And some energy call buying, names like BP, P10. And energy was really the, by far and away the best performing sector. I think OIH still ended up 2.5% on the day. So, that's another area that, possibly big drawdown in inventories fueled that group. All right, so that's it. No, crystal ball reading, but I think considering kind of the weight of what is going on globally, it would not surprise me if we do have some more pain to the downside. So be prepared for that in your trading plan, in your positioning, and your trade size. Have a great night, everybody, and get a little bit of R&R in tonight. I'm doing that. I'm going to go out and have a few beers, and kind of helps me a little bit to kind of get away from the screens for a couple hours. Don't be afraid to do that, and you will be. It'll really kind of freshen yourself up a little bit. In terms of what you're experiencing on a day-to-day. So get in that, you don't have to do what I'm doing, which is going out and having a couple drinks and a burger. You could also exercise, which is much more healthy. All right, guys, have a great night. See you tomorrow.